Well, the bidding war for Southern Union has sent shares soaring over the last month, and it's just one of several deals now in play. Joining us now with her view of the M&A market is Nancy Havens. She's president of Havens Advisors. That's a New York-based arbitrage fund manager. Nancy, good to have you back with us.
Hi.
So Southern Union, you and I were just talking in the break.
Yes.
You've owned this company for a while, so this has been a good call.
Well, since they first made their offer, yes. So we bought it initially.
The market's saying, despite there being two bidders in here at this point, kind of going back and forth, the market's saying it's going to go higher. I mean, you buy that.
Absolutely.
How much higher, you think?
Well, I don't know. Mid-40s is sort of our current target. We do think it's likely that Williams comes back. And the offer by itself right now is worth just over 41.
Okay.
It's a cash and stock offer, the newest offer. First bid was 33, second bid was 39 from Williams. The third bid from ETE, the original bidder,
right.
Is now worth 41, and the stock's trading at 42.
Right, so the market's saying it's going up, and you don't care. You own it. You bought it when it started,
right.
Bidding started, and it just keeps going up.
Whoever wins, wins, and we just want another bid.
Does this tell you something about the M&A market right now in terms of how we're seeing things play out with Southern Union and some other companies?
Well, it tells us something about this particular deal. I mean, this company has very valuable assets, and both of these companies need these assets. Mm-hmm. And you have a company that had an older CEO who basically put the company up for sale. He accepted, or they accepted, a sweetheart deal at $33. That was very strange looking. The two top executives were getting $100 million in payments, which was a rich settlement.
Sounds a little crazy.
Yes, and it was a very weird structure that clearly indicated that Southern Union had control of the process. And they just didn't keep control of the process because they accepted a bid that was too low. Mm. So then Williams came back. And
back and forth,
right.
And that's why, and it's not quite over.
Right.
Yeah.
Hey, Nancy, let me ask. You know, Carol asked about the broader. Sorry, maybe Carol can translate. Can you hear?
Good. Can you hear, Nancy?
No.
Matt,
I wanted to ask about the broader M&A market. I mean, June was the slowest month in the last 8 for M&A deals. Down here on the floor, we had a bit of a slowdown until, of course, last week. So, is M&A slowing down with the slowing of the economic recovery, with the slowing of global markets?
Is M&A slowing down? June was the slowest month, as Matt mentioned, in a while.
Well, you know, over 4th of July, we don't normally have the kind of deal activity that we had. We came in yesterday expecting a relatively quiet day because 4th of July week is always really quiet. It is the best week to take off in M&A. And we came back to 2 increased bids, one new bid, 3 new bids, and in addition, an exploding situation in London in B-Sky-B.
So what does that tell you, Nancy? That you say typically it's a quiet weekend, and yet a lot of stuff was going on.
We had a lot going on. Timing of merger activity is difficult to predict. We have smaller deals now, which means that if one large deal is not announced in June, the activity is going to look much lower. And the way they're counting is by volume rather than by number of deals. We have a huge number of deals. It is continuing. It slowed down slightly in June, but it's picked right back up in July. So I'm not very worried about it. Yeah.
Well, that's good to hear. Hey, Nancy, we're going to leave it there. Nancy Havens, thank you so much.